Hi everyone, and thank you for joining us today. Just a small bit about myself to start off. I started my own practice back in the 80s and eventually grew to a 3-partner practice with 10 staff. While in practice, I provided payroll bureau services for about 30 clients, so I have some idea of what it is like in the front line. In 1992, I got into payroll software development. A large part of my reasoning for this was to make better software than what I was using at the time. Eventually, I began working in software development full-time. About 3 years ago, we introduced BrightPay in both the UK and Ireland. However, I can't claim full credit for BrightPay as it is written by someone younger and better than I, my fellow director, Ross Webster. Today, over 80,000 employers across the UK and Ireland use our products, a figure that we are improving on every year. So here's the agenda for my slot today, which I hope you will find useful and give you plenty of food for thought. When talking, I will often refer to Auto Enrolment or Automatic Enrolment simply as AE. For those of you who have tuned into any of our previous webinars, apologies if I end up repeating some of the points previously made. Unfortunately, this is unavoidable. Just a brief introduction to AE before we start off. What auto enrollment means for an employer is that from their staging date or from the deferred date, if they're using postponement, all eligible job holders must be automatically enrolled and the employer must make contributions to their pension. All employees must be assessed to determine whether they are eligible job holders, non-eligible job holders, or entitled workers. Eligible job holders are those who are aged between 22 and state pension age. They earn above the earnings threshold, which is currently £10,000, and work in the UK. All other employees are either non-eligible job holders or entitled workers, and they can choose to join the workplace pension scheme. Eligible job holders can opt out after being enrolled. So auto-enrollment is something that is optional for the employee, but mandatory for the employer. Auto-enrolment is being rolled out in stages across all employers and started with the largest employers in October 2012. By October 2018, all employers will be required to offer workplace pension schemes to eligible workers. By the end of January this year, over 87,000 large and medium-sized employers had completed their declaration of compliance, enrolling almost 6 million eligible job holders into a workplace pension scheme. The pensions regulator estimates that over the next 3 years, around 1.8 million small and micro employers will need to act as a result of auto-enrolment. This means that less than 5% of the total number of employers have staged to date. You will see from the slide here that this quarter is where the so-called tsunami begins, with 110,000 small and micro employers set to reach their staging date between January and March this year. A lot of the companies staging before now will probably have had their own HR people or in-house accountant to help them through the enrollment process. The vast majority of those staging from now on will have no in-house expertise. The majority of these employers will not have the knowledge or experience to make informed decisions when it comes to their AE obligations. With the vast quantity of information available, employers are fast becoming overwhelmed with the entire process. These clients will require help understanding the implications for them, their employees, and their business. The pensions regulator estimates that 78% of SMEs will turn to an accountant, bookkeeper, or payroll bureau. So you have a gift-wrapped business opportunity, and this is business you don't have to go chasing. Payroll bureaus need to decide if they are ready to take on AE business. It is estimated that 90% of an accountant's client base is made up of employers with less than 50 employees, and it is from now onwards that these employers will be affected by auto-enrolment. With many shying away from offering this as an extra service, bureaus will need to determine what kind of information and support they will offer to help their clients comply with these new AE duties. Advisors will find that a large portion of employers will contact them very close to or even after their staging date. And just on this point, if a client does contact you after their staging date and has done nothing, if their staging date has passed by less than 6 weeks, get them to issue postponement letters to all employees immediately. If this communication is not issued, then the postponement effectively never happened, and enrolment must be completed retrospectively back to the staging date, which would in itself be a nightmare. Be sure to convey the client benefits of outsourcing the AE task to you. If you take the opportunity to inform clients about the added value, they are more likely to remember and understand your service offering. There will be significant time savings for your payroll clients. By outsourcing AE to a payroll professional, your client can avoid investing huge amounts of time researching how to comply with AE. The implementation of AE could also be very time-consuming if your client doesn't have the correct technology or software in place to automate a lot of the AE admin tasks. Time is money, as the saying goes. Without your help, your payroll clients might choose payroll software that doesn't have AE functionality. Even if it does, some payroll providers are charging an additional charge for AE functionality and a further charge to support your clients through the process. With a bureau, your client can avoid costly mistakes and save time that otherwise would have been taken out of their normal working week. Focus on core areas. Especially for small and micro employers, their time is extremely precious. Time away from their business is money. Outsourcing AE to a payroll professional frees up their energies and enables them to focus on the core areas of running their business. Implementing AE may require skills that client staff do not possess. Outsourcing will provide a level of continuity to the company while reducing the risk of possible non-compliance. By offering a complete end-to-end solution, bureaus can generate income and enhance client relationships. If bureaus offer other services such as bookkeeping, tax returns, audits, management accounts, etc., they will have a new platform to reach and upsell to this new audience. You will find that employers will be happy to consolidate all their outsourcing services to one person or advisor. It is important that bureaus automate their clients' auto enrolment duties, which will enable them to work more efficiently and as a result increase profits. With AE comes a number of employer responsibilities. Number one, a pension scheme must be set up with a qualifying AE pension provider, and this should be done in advance of your staging date. This should not require a great deal of time to complete. If you have no eligible job holders, you can hold off registering with a pension scheme until you need to enroll someone. Next, all employees must be assessed at your client's staging date, and all eligible job holders must be automatically enrolled into a workplace pension scheme unless they're using postponement. All employees must receive communications within 6 weeks of the staging date, not just those who have been enrolled. You must notify eligible job holders, non-eligible job holders, and entitled workers, including those who have been postponed, informing them how they have been affected by AE. There are also a number of ongoing employer responsibilities, such as handling opt-outs, opt-ins, and joining requests, making deductions and contributions, monitoring employees each pay period, and sending a contribution file to the pension provider. Employers, or you on their behalf, must complete a declaration of compliance within 5 months of the staging date to notify the pensions regulator that they have complied with AE. Fortunately, modern, innovative solutions exist that can automate AE chores. Armed with the employer staging date, bureaus can now simply enter the date to assess each employee's eligibility for AE at the staging date. Before staging, the employer, or the bureau acting on their behalf, should register with a pension provider. Again, this should not take long. Registering with Nest, for example, should take no more than half an hour. And I believe from some of our bureaus we were talking to that they have it down to something like 10 minutes per employer. Before staging, you should also research software solutions to find one that will make your life easier. Staging is the most hands-on task involved, and although it can take an hour or two, it will become easier and faster for accountants for every new client that is staged. Tasks at staging include enrolling all relevant employees, communicating as required to all employees, and setting up and commencing employee deductions and employer contributions. Good payroll software will have print-ready employee AE communications based on each employee's individual eligibility. From that point on, it is just a matter of monitoring employees, submitting contribution files to the pension provider, and managing employees who opt in and opt out. Some payroll software monitors the ages and earnings of employees in each subsequent pay period to see if any further enrolments are required and if any new employees should be enrolled. Each of these enrolments should only take minutes to process. For large, repetitive, or time-sensitive tasks, the speed of automated AE offers both significant cost-saving and time-saving benefits to bureaus. This would be especially relevant when these employers approach their bureaus close to, at, or even after their staging date. AE does not need to be a major headache for accountants and their clients, provided that they take some time to make sure the right tools are in place to deal with it. AE should become a seamless part of the payroll process. BrightPay is an integrated payroll and auto enrolment solution that will enable you to streamline and simplify the auto enrolment process for your clients. So I would now like to hand you over to Vicky for a very quick demo showing you just how easy auto enrolment can be with BrightPay in this case. And in this example, we are assuming that the employer, or you on their behalf, has already registered with a pension provider, in this case Nest. And as I said before, registering with Nest should take less than 30 minutes on average to complete. So over to you, Vicky.
Thanks, Paul. So we'll just get set up here, just 1 second there. Oh, thanks, Paul. So good morning, everybody. So yes, just to show you now how our BrightPay software handles the automatic enrolment process for you. So the starting point is when you have your staging date. And as soon as you know your staging date, all you need to do is enter our pensions utility here and enter your staging date in the designated field provided. By entering your staging date here, that means that BrightPay will know when to kick in with your AE alert, so to start informing you that you have AE duties to perform. Once you have your staging date entered, as soon as you have the details of your pension scheme, these can also be entered in the software in advance of your staging date. And that's done in the pensions utility as well here by simply clicking on Add New Scheme. So currently, BrightPay offers dedicated support for 14 pension providers, and you'll see the names of those on the screen there for you. This list isn't final. We will be adding more to that as and when needed. For example, we're working with True Potential at the moment and Smart Pension as well. Where we do offer dedicated support, that basically means that BrightPay can complete the automatic enrolment process for you by actually producing your enrolment and contribution files needed for the relevant pension providers. So that will speed things up for you. All is not lost. If you're with a pension provider that isn't one of our dedicated ones listed, you can always use the other automatic enrolment scheme option to set up your pension scheme in this way. The only part of that is that, obviously BrightPay won't be able to produce automatically the CSV files for you for upload into the pension portal. A useful feature, especially for payroll bureaus, is the assessment report, which you'll also find at the top of the pensions utility here. And this can provide you with a pre-assessment of your employee. So basically, it can give you a snapshot of what is likely to happen when you reach your staging date. So for example, it's going to give you an idea of each employee's worker category, what their qualifying earnings will be, and the employee and employer contributions there. So this is a handy report to maybe email to clients ahead of their staging date, just to give them an overview of what's ahead for them.
I suppose more importantly, what it's going to cost them
and what, yeah,
on
exactly.
a sort of periodic basis as well.
Exactly. Okay, on the same report, we also have this useful assessment guide as well. So it's a two-part report that can be emailed over to clients. Okay, so once you reach your staging date, if I now go into the payroll utility, so I have a staging date entered of the 1st of January here. Okay, so as soon as I reach my staging date in my payroll, BrightPay will kick in with your alerts. You'll see these on-screen flags appear and also these yellow alerts here. So as soon as you reach your staging date, BrightPay will automatically assess your employees for you and will determine whether they are eligible job holders, non-eligible job holders, or entitled workers. So you'll see here my first employee is being assessed as an eligible job holder, and all I simply do is click View Options, and it will bring me through to the options available for this worker category. So I have the option to enroll the employee, to postpone them, or mark as exempt if applicable. So in this instance, I will just enroll the employee here. So simply select the scheme. Oh, apologies, I didn't set up my Nest scheme. I'll do that now for you. Add scheme. So I just set up Nest here for you. So I'm just going to enter in my employer reference here. And then I'm just required to set up my group. So with Nest, you will have set this up initially when setting up with Nest at the setup stage. So your groups will already be set up. So you need to match exactly how you have the groups set up. So I might have a weekly group. When entering your group details, you will also be given the option to select the contribution rates that are applicable. Okay, so we have to use the phased minimums, or you can use custom rates, for example. And then also to assign the earnings basis, so whether you're using the standard qualifying earnings or whether you wish to customize these. For example, you may wish to remove the limits.
I suppose by default we're including the actual default basis that the majority of employers will use.
Exactly. If you have further groups, if you have more than one group set up with your pension provider, you can add more groups here. So for example, you may have employees on different pay frequencies, or two sets of employees within one pay frequency but who have different rates applied to them. So I'm just going to save, and that sets up my Nest scheme here. So I'll just pop back into payroll here, and we'll go to enroll my eligible job holder. So I'm going to click on enroll, and I'm going to select my scheme. So I'm going to enroll this employee into my weekly scheme, then select the applicable tax relief and click continue. So you'll see at the same time as enrolling one employee, I am given the option to actually enroll multiple employees with the same settings. That's quite handy, especially in a bureau environment. It will speed things up. It allows you to enroll in batch a number of employees all at the same time. So I can click on enroll, multiple employees, select them all, and enroll. And all those employees are being enrolled at the same time for you. Once you've enrolled an employee, BrightPay will also automatically create your enrollment letters for you. And these can be, if I just click on letter here, they can be printed, they can be exported to PDF, or they can be emailed directly from BrightPay to the employee. Okay, so I'll just do a print preview on screen. So the user is given control over page settings, for example, and I just do a print preview here. So we are using the 2015 Pension Regulators Simplified Letter Templates here. So you'll see here on screen, this is just an eligible job holder's enrolment letter. So it's going to contain information on the employee's enrolment date, how they can opt out should they choose to do so, what their rates, their contribution rates will be, and just some general information on what automatic enrolment will mean to them. Okay. Similar to enrolling employees in a batch, you can also create or send the enrolment letters in a batch as well by simply clicking Create Send Letter for Multiple Employees. So again, they can be printed, exported, or emailed all in one go to a number of employees. And then once the employees are in receipt of their enrolment letters, you simply instruct the software that this has been done. Okay, and if I return to my payroll screen, you'll see the flags have disappeared for those employees because I've dealt with my AE duties for them. So I just take my next employee here, and this employee is being assessed as a non-eligible job holder, and if I click on View Options, you'll see I'm given the following options for this worker category. So to write to them, inviting them that they can opt in, should they choose to do so. Then the opt-in option, if they wish to opt into the scheme, to postpone or mark as exempt. And if I take my third employee in the list here, they are being assessed as an entitled worker in this instance. And if I click on view options, again, I've 4 options for an entitled worker. So again, to provide them with their letter inviting them that they can join. Then the join option, should they choose to do so, to postpone or mark as exempt. Should you wish to use postponement, that's done quite easily by clicking on the postpone button. And you simply enter your deferral date, which can be a maximum of 3 months after the assessment date, and click continue. If you would like to postpone a number of employees at the same time, simply click postpone assessment until the entered date for multiple employees, and you can select them all at the same time. Likewise, BrightPay will also automatically create your postponement letters that need to go to employees who have been postponed. And again, they can be printed, exported to PDF or emailed, and also marked as done. And again, you have the option to batch process those letters as well, like so. Okay, so if I return to my payroll screen, anybody who has been enrolled, has opted in or joined, you'll see then on their payslip that their pension contributions will now be applied. And if I just finalize this pay period here, and just do a print preview of a pay slip, you'll see here that their pension contributions will also flow through to the pay slip for you. Okay, so once you've finalised your first pay period after staging, if I just go into the pensions utility, so I mentioned there just a little bit earlier that where we offer dedicated support for a pension provider, it means we can do the contributions files, and if the pension provider needs an enrolment file, BrightPay will automatically process them for you. So Nest is an example of a pension provider that needs an enrolment file first and then a subsequent contributions file for every pay period going forward. And one of the benefits of Nest is that they offer an API, which basically works similar to RTI, in that you can submit your submission, your enrolment file submission, your contribution file submissions directly from BrightPay into your Nest web portal. So if I just click here, I'll show you how that works. I'm just going to enter just some dummy credentials here. Okay. So to do an enrolment file into Nest using API, I'm going to click on Enrolment Summary. Just click OK to that message. Click on Send Enrolment File. And it's 3 steps here. So I select the employees I want to include in the submission. Then my payment source. Again, Nest is quite specific. You have to match the payment source that you have entered in your Nest portal when setting it up. And at step 3, this is your file for submission, albeit it looks a bit gobbledygook, but you literally click Send Now, and that goes straight into your Nest portal. We're in a test environment here, but what will happen at the top right, you'll get confirmation of whether the file has been received by Nest or not. And if successful, that successful message will come back in on the screen for you. That's the enrolment file. For your contributions file, it's done very much the same way. So I'm going to simply click on Send Submission in the contribution summary screen. Just enter my payment due date that I have set up with Nest. Click on Next. Again, select my employees. If for any reason an employee hasn't made a contribution or it's been a partial contribution, you can select the reason why. And at step 4, again, simply click Send Now, and that will be sent straight into your Nest portal for you. And again, you'll have a successful message come back here once successfully received. BrightPay can also handle opt-out requests. So if an employee has been enrolled and subsequently opt-out in their opt-out window, all you need to do if you receive an opt-out request is enter the employee utility here, select the employee, and go into their automatic enrollment screen and simply click the opt-out button. Type in that opt-out reference if you've received one and press continue. If I then go into the following pay period, you'll see that if the employee has already made contributions, that they will then get a refund of their contributions on their next open payslip. And you'll see also as well the employer pension will be refunded too. That will show on the payslip as well. At any time, should you require any AE reports, you can use the analysis function here, and by clicking on new report you can create your own automatic enrolment reports to suit your needs. So for example, I may wish to run a report on, if you just scroll down here, on my AE worker category, enrolment dates for example, opt-out dates, or I may want to just produce my own contributions files for my own records, for example, just on my weekly nest contributions here. Select those and run the report and display them on screen here. Okay, so you'll see here that I have met my AE duties at staging, and BrightPay doesn't stop there. It will continue to monitor employees for you. So any employee may be turning 22. BrightPay will then appear with your on-screen alert again, just to tell you that you now have more duties to perform. And likewise, any new employees joining, you know, if they, as soon as they join the first pay period again, they will be assessed for AE. Okay, that completes the demo. I'll just now pass you back to Paul.
Okay, thank you for that, Vicky. Just one thing I was thinking of there while you were showing the Nest side of things. One of the things I discovered recently, when you actually set up with Nest through the Nest portal and you specify your payment date and you can complete the direct debit mandate within Nest, I had assumed that meant that Nest would automatically take payment every month. Apparently that's not the case. You actually need to go in and approve the payment to be taken every month.
Exactly.
So that's something that can catch people out a little bit.
Yeah.
Okay. Right. So now, just to finish off my part of the presentation, we will have a look at the 5 different steps to increase profits from auto enrolment. Step 1 is to communicate with clients and let them know that you are open for auto enrolment business. Advisors will find that a large proportion of their clients will contact them very close to or even after their staging date. It is important to engage with small and micro employers that have not yet staged to help reduce the number of latecomers. The first thing to do is to find out your client's staging date in order to start planning accordingly. It is possible to look up your client's staging date on the pension regulator's website if you have their, obviously you do have their POI employer number. You need to be proactive and notify these clients that you're open for AE business. Communicate your service offering and price it with your clients so that they know who will be responsible for each task. The way in which you communicate with clients about your AE services will play a big part for your success strategy. Early and clear communications is key to successfully increasing prices. Your customers will take the news a lot more graciously compared with suddenly springing it on them. It is natural for clients to be cautious when they are told that the prices are increasing. However, you must be confident in outlining the additional work and expertise required to process automatic enrolment. By explaining your price increase and justifying the benefits for your client, you will naturally be more successful. Clients will accept the change if they understand the reasoning behind the price increase. You could meet with the client and outline exactly what is involved in auto enrolment and then let them choose how much work and responsibility they want to take on. You should set out clearly the respective responsibilities of you and your client. For example, it is important to point out that the client is responsible for keeping correct records of staff earnings and age and for making payments of pension contributions on time. A good idea would be to send clients the pre-assessment overview that we kind of showed you there in Vicky's demo in advance, which details each employee's pensionable pay, assessment work category, and employee and employer contributions. And as Vicky showed you, this tool is available within BrightPay. Having payroll software with comprehensive auto enrolment functionality will play a vital role in ensuring the success of automatic enrolment. Without the appropriate systems, bureaus will need additional time and resources to cope with AE. Ensure that your chosen payroll software provider will provide all the necessary functions to automate the employer admin tasks. The regulator urges bureaus and employers to check with a payroll provider to ensure that it will correctly identify the duty you have for each employee and to see if the system will support the requirements of AE. Step 3 is to automate and streamline auto enrolment tasks. Automating AE tasks provides a massive competitive advantage for bureaus in today's payroll world. The faster you process each client through AE, the more you will increase productivity and revenue. By automating the AE process, you will reduce the amount of time you spend handling each payroll client. This will be key to success and allow you to increase the speed involved in these types of jobs. AE can be automated by payroll software, which should be included as a standard free feature in your current payroll package. Ensure that your payroll software provider will provide all the necessary functions to automate the employer admin tasks. The regulator urges bureaus and employers to check with their payroll provider to ensure that it will correctly identify the duty you have for each employee, and as I said before, to see if the system will support the requirements of AE. With a combined payroll and AE solution in place, bureaus will benefit from greater efficiency, increased value, and improved cost savings. Step 4 is to avoid penalties and fines for non-compliance. The impact of AE will affect your client's business now and for the foreseeable future. The pensions regulator continues to enforce fines and penalties for non-compliance. As of the end of December, the pensions regulator had issued 4,818 compliance notices and nearly 1,600 fixed penalty notices. And you can be sure that these figures will mushroom in the months and years to come, particularly with the small and micro businesses. Not allowing enough time to plan could lead to your clients being fined. By planning ahead, it will allow you, on behalf of your clients, to avoid hefty penalty fines. Step 5 is to increase revenue. By offering AE as a chargeable service, bureaus can add additional revenue streams, provide added value to existing clients, and increase the possibility of bringing new clients on board. It further provides a competitive edge to you over other bureaus that refuse to provide AE as a service to their clients. Keep in mind that the pensions regulator states that 78% of employers will look to a payroll professional to assist with AE. The majority of these employers will want their accountant, bookkeeper, or bureau to look after all of the AE tasks. If you're already doing their payroll for them, it is unlikely that they will want any part of the AE process and will prefer to leave it all to you. A clear pricing structure will allow any bureau to accurately cost and schedule the work involved for each client. By offering a range of pricing packages, clients can evaluate each one and choose the package that most suits their needs. Be sure to increase your price enough so that you won't have to do it a second time in the following year. And this very subject, BrightPay are running a CPD accredited webinar on the 24th of March, where we will examine 3 different auto enrolment pricing strategies that you can use when offering auto enrolment as a service. We'll include details in our follow-up email. Naturally, you will want to increase your price to at least cover any additional costs incurred for processing AE. So it is important that bureaus shop around for payroll software that offers automated AE functionality at no extra cost. Some software providers have decided to charge separately for AE modules or add-ons. Good payroll tools will include AE functionality for free and automate AE. Ensure that your pricing structure exceeds your operational costs. If you are a company that offers other services such as tax returns, bookkeeping, audits, tax planning, HR services, etc., you will have an opportunity to cross-sell these services, especially to new clients. By offering a related service as an upsell or cross-sell, it can become part of your strategic growth plan. You will find that employers will be happier to consolidate all their outsourced services to one person or advisor. This is a great way of increasing revenue from the same number of clients. Basically, you will be a one-stop shop, as you will be solving more than one problem for the client. So just to summarize the points in today's webinar, it is important to get out there and make sure that your clients know that you are providing AE as a chargeable service. Communicate your service offering and your price increase clearly and in advance of your client's staging date. Your clients will be surprised if you don't increase your charges, especially with the additional setup time initially required. Be sure to have the correct payroll and auto enrolment tools in place that will allow you to streamline auto enrolment tasks. Automation reduces processing time, increases accuracy, and reduces human error, allowing you as a bureau to work more efficiently. Having integrated tools in place that can automate the AE process will also help you and your client avoid hefty non-compliance fines and penalties.
Okay, thanks, Paul. So before we pass you over to Ian today, we're actually going to go through a few quick points here and answer a few questions that are coming through for BrightPay. So if you do have any BrightPay questions, please type them in the chat bar now. So here's a link to book a BrightPay demo. There's also a link to free auto enrollment guides or to upcoming webinars. Just to note as well, our next webinar is on Thursday the 24th of March, where we will present 3 unique auto enrolment pricing strategies, and this is CPD accredited. We will also have a guest speaker from Nest on the day who will present Nest helping make auto enrolment work for you. So we will include information of this webinar in the upcoming email. Also, here's a few BrightPay statistics that we are proud of. We're also a preferred supplier of tax assist accountants, and we are accredited by the Institute of Certified Bookkeepers. So now for the questions, and there is a few questions coming through here for BrightPay. So when is Smart Pensions likely to be available? At a webinar a month ago, it was soon.
Okay, yeah, good question. It is on the plan for the initial release of the 16-17 BrightPay. We're hoping that, well, our initial release will be towards, I think, the 22nd of March in order for bureaus to get their clients set up, etc. We will have another release on the 5th of April, and it is in that particular release that we're planning to have the Smart Pension API. Unfortunately, there's an awful lot of other things going on. There's a lot of the viewers might be aware of payroll benefit in kind, things like that have hit us as well. So it's unfortunately there's a lot of development challenges there at the moment.
Okay. Another question here. Does your software work seamlessly with Pegasus Payroll Opera Payrolls?
Is that in terms of importing, I wonder, or I'm not familiar with?
I'm not too sure. BrightPay is a payroll and auto enrollment software solution, so
I don't know whether maybe it's a HR system or something. We don't have any ties with Pegasus, so I wouldn't say.
Just responded here in terms of importing.
All right. I don't know whether we have a particular automated import from them. We do actually have a facility within BrightPay that we can take in a CSV file, and if somebody sort of clicks on a CSV file that's been produced by another system and then tells BrightPay what the various columns mean, it's like employee surname, forename, address, and things like that, it will then bring in all that information. But we don't have an automated thing from Pegasus, and maybe that's something we can look into.
Okay. If you are a bureau, can you enroll lots of employees at once for different companies?
With Nest, I presume, is it? Lots of employees. Oh, sorry, this will be like a batch, I presume. It would be very difficult to do a batch processing of AE. Would even with the likes of Nest, because of there's a 3-step process each time you submit a contribution file. So you do actually have to go into each individual employer and make the submission there in that employer. So there's no batch processing, unfortunately, and we can't see how we could do it either.
Okay. Is auto enrollment obligatory to companies with one person as a sole director, or can they simplify all these stages?
For one director companies, those companies are actually not regarded as employers for auto enrolment purposes. So it's a case that you need to inform the pensions regulator. Maybe we could provide a link to the particular page in the pension regulator website where somebody can actually inform the regulator that they're not eligible or they're not obliged to comply with auto enrolment. It's important that you do that because otherwise the pensions regulator would be expecting a declaration of compliance 5 months after the staging date, and they don't get that. That'll lead up to follow-up action. But the answer to the question basically is no. A single director company does not have to comply with auto enrolment.
Okay. When setting up in Nest, you stated that you have to state payment method. Is it easy to change later if the employee moves from cheque to direct debit, for example?
I don't know the answer to that offhand. Vicky, do you?
Yeah, I don't know if you can hear me. I'll just come closer to the mic. Yeah, when we reference when we were showing the payment method there, it's what you set up with Nest, so it's how the company are going to remit their pension contributions that they've collected and what the employer contributions as well. So it could be direct debit, backs. So it's not on an employee level, it's employer. It's how the employer is going to remit their contributions.
I suppose the question there is it easy to change it?
I think so. It may be more a question for Nest. You can, I think what you would have to do is then go into your Nest portal and edit a setting. Without looking into the Nest, it may be a question we can...
Yeah, and then when you go back into BrightPay, to make sure you change the
payment
source to be the exact same as the new one that you amended within the Nest portal.
Yeah. Okay. Another question here. I'm fairly new to BrightPay and switching over fully in 16/17. Is the Standard Life API running already?
No, we don't have that in BrightPay at the moment. I think we have the CSV.
Standard Life is a dedicated, is one that we do dedicated support for, so we can do the CSV files for upload, but not the, we don't have the API
We
yet.
do intend to, we will be working with a company called Pension Sync, and I believe that basically the API that we'll have with Pension Sync then can feed into the Standard Life portal automatically. So I think that hopefully that answers that question.
Okay. Will the payment dates run in months like HMRC June 19th following month?
They're quite similar. I think the latest date is the 22nd.
Nest is the 22nd. Yes, I'm not sure if the other payroll providers follow the same pattern.
And Nest are kind of keen to point out the 22nd is the date which the funds must reach them by. It's not the date you make the payment. It must be in Nest's bank account on by the 22nd.
Okay. Can we have a copy of the slides? So yes, of course, we'll send out a link to the recording and all the slides afterwards. Will CorePad pension provider be added to 16/17 BrightPay?
I'm not familiar with that one.
I haven't heard that one, but by all means, if you want to give us a call, we can maybe take some details down. Okay. What is the procedure regarding direct debit payment confirmation in Nest? Do you have to log into the web portal or can BrightPay handle this?
You do have to log into the web portal each month to basically say yes, it's okay to take the direct debit. We do understand that there is an API addition for this that we're going to look into to try and automate that confirmation process, but it won't be available in the initial 16/17 release of BrightPay.
Okay. If you have only one employee who's not a director, do you still need a pension scheme?
Well, if that employee is an eligible job holder, yes, you would need to have a pension scheme set up and enroll them into that scheme. Even if you know they're going to opt out, you still have to set up the pension scheme, enroll them into it, and let them opt out then.
Okay. Does BrightPay Bureau have an overview screen for all employers? Yes, it does. Yeah, hopefully you can hear me there. I'm just leaning across. But yes, the open company screen, so when you first enter BrightPay, the first screen will list all your employers. It then tells you when it was last opened, what month or week, for example, was last processed, if you have any RTI submissions outstanding. Gives it an overview.
We'll probably add to that, particularly for bureaus, we'll add to that list and what they can see on the overview in due course.
Okay. Do you have to auto-enroll even when you know the company's employees are going to opt out?
Absolutely.
Okay. Do you need a pension scheme in place if all employees are non-eligible at the staging date?
Well, the latest advice from the pensions regulator is that no, you don't need a pension scheme in place in those particular circumstances. If the non-eligible job holders then do decide to opt in, obviously you're going to need to get your pension scheme set up fairly quickly to accommodate that. Now, getting a pension scheme set up is a lot quicker than they used to think it was going to take. I know initially when pensions regulator was talking about auto enrolment, they were saying like basically you need 6 months to prepare. The actual process of setting up a pension scheme is very quick. The process maybe of selecting the pension scheme is something that you'd want to give consideration to, even if you don't have eligible job holders, so that you know at least which scheme you're going to go with. The actual process of enrolling with that scheme can take like a matter of minutes, really.
Okay, one final question here. What are the costs of BrightPay for the Bureau license and annual support costs? Also, what's your support opening hours?
Okay, the Bureau BrightPay is £199 plus VAT per annum. That includes support. The support hours are Monday to Friday, 9 to 5, effectively.
Okay. So that's all the BrightPay questions. So I think it's time for us to pass you over to Ian Katte from BTC Software. So
okay, well, I'll just say goodbye to everybody and thank you very much for tuning into my bit today. And good luck, Ian, with your part of it.
Hello. Okay, thank you, Paul and Vicky, for that very informative session on auto enrolment. So now it's time to move on to the graveyard shift of this webinar, but please stick with me. Firstly, please let me introduce myself. My name is Ian Katte. I'm a non-Smirnoff drinking chartered accountant, and as well as running my own small general practice, I'm a co-founder and director of BTC Software Limited. I should mention at this stage that I am also recovering from a bout of man flu, and so apologise in advance for any coughing or necessary drinking of water. I will attempt to keep these occurrences to a minimum. The agenda for this section is now showing on your screen. I expect the section to take about 20 minutes or so. In the first instance, it will be a one-way stream comprising of me talking to you. However, at the end of the presentation, there will be a panel for questions and answers, and I'll also provide you with my contact details. And I welcome your feedback concerning anything you've seen or heard, or indeed anything that you're hoping to hear about that hasn't been covered. So it's compliance services that provide the bread and butter for myself and many SME practitioners. Whilst we would all like our clients to provide us with more of the so-called value-added assignments, generally the core of our business is made up of helping them keep abreast of the increasing burden of their compliance and reporting obligations to various authorities such as Companies House and the HMRC. This involves us preparing tax returns, personal and corporate, providing Payroll Bureau and bookkeeping services, often including producing monthly or quarterly management accounts and VAT returns, preparing annual financial accounts, and other areas such as company secretarial duties. The feedback we're getting is that the face of the accountancy market is changing. There are greater levels of competition for compliance work, larger numbers of clients and less fees per each. There's a trend of pressure on fees for the compliance work and thus a squeeze on profit margins. So altogether, we need to be able to work smarter in our practices. As I see it, the way to make success out of these services, by which I mean make money out of them, is to systemize the internal processes that are involved. Among other benefits, this will ensure that the right task gets carried out at the correct time by the right person, that important deadlines are not missed, and as a consequence, clients are not penalized with late filing penalties and don't get aggravated with us, and that we don't waste time searching for client-specific documents. Across the range of small to medium-sized practices out there, the quality of our work as accountants is generally a given, meaning that we can all prepare a tax return, or a set of financial accounts. However, the best practices are those that consistently meet client expectations with regard to timely completion of work, and by that I mean well before filing and payment deadlines. Probably largely due to HMRC's relatively recent insistence on electronic filing of personal and corporate tax returns, there won't be many accountancy practices these days that don't rely on software in some or all of the areas that I've mentioned. However, these are areas of rapid change, also mostly driven by HMRC. But the million-dollar question is, are you using software because you have to, or is the software actually making your life easier? Is your use of software reactive or proactive? Let me explain. Not all of us have integrated solutions at present. Many practitioners use spreadsheets as their client database, containing key details of clients, dates and the services that they perform for them. Often planning takes the form of scheduling on whiteboards or in particularly clever spreadsheets with color coding and the like. Neither of these methods can produce automatic reminders for tasks and or events, but typically rely on a managerial review and update. Good software is designed to make our lives easier. Being proactive on creation of a client record, a small amount of investment reaps dividends. The software can be used to create a workflow. The best software creates statuses for work, which allows you to mirror the actual workflow in your office. So, integrated practice management systems were devised that put all the data in one central hub and which allowed tasks such as preparation of tax returns and year-end accounts to be linked to specific clients, that automatically produced reminders for one-off or recurring events. In this way, a practice can become more efficient and thus more profitable. So the obvious question is, why are firms reticent about adopting new software which will make life easier for themselves? So let's address the elephants in the room. First of all, there's the learning curve, the requirement to retrain yourself and your staff. Whilst not all software companies provide training or support, the good ones do. So do your research. Also, not everyone will provide this support and training as part of the package, i.e. at no extra cost. But the most customer-orientated ones will, and this will help flatten your learning curve and minimize costs. Others will provide overly complicated products and then require users to purchase training. In other words, the software provider views training as an additional revenue stream. You'll need to be wary of this. The software provider that you should be looking to partner with should provide an intuitive product with free training and support. Support needs to be telephone support, I believe, not just email or live chat, and the good ones will offer free phone numbers. Support needs to be responsive within published timeframes. Support needs to be reactive and then proactive. By this I mean that they'll sort out a remedy for your immediate and current issue, but also be alert to any other potential problems. Throughout any evaluation period, the best providers will offer unlimited support and won't differentiate between a customer and a trialist. Staff reluctance to move. We recognize that change is not always easy. In some cases, the challenge is to convince staff to buy into the changing of the platform, as in many cases it will be the staff using the software as opposed to the decision maker. This takes us back to the learning curve I spoke of. To get staff on board, in our experience, there are a couple of steps that can be taken. Arranging group training sessions for key users and having an allocated account manager to provide guidance. Group training sessions bring all the key users together, not just to learn the software, but to provide a think tank environment in which they're able to share ideas about how to get the best out of the software using worked examples. The key objective is to show staff how using the software will make their lives easier, not just make you richer. Costs. It's understandable that people will be concerned about costs when contemplating adopting or switching to new software, particularly in the light of ladder pricing from some providers. By this I mean a range of license costs that depend on the number of clients you have, with providers that want to charge you more as you increase your client portfolio by bringing in more customers, a price rise which essentially penalizes you for your success. Before signing up with a new provider, ask them the question, what's the ceiling for this contract? At what point is the next level, and how much will it be? As previously mentioned, look out for hidden extras such as support. Look for clear and transparent pricing. Be aware of your second-year renewal prices. There are solutions out there that offer great value for money. Does expenditure on new software always mean additional expenditure on IT in general? The answer, I believe, is not necessarily. However, we've always found that the best practices don't stint on expenditure in the information technology arena, and we would recommend that all practices be aware of the need to keep up with advances in IT. Excuse me. We've come across cases where the operating system software, and in many cases the hardware being used, is older than some of the employees. At this stage, we firmly believe that it's an area that should not be overlooked, particularly if the versions of your existing software are no longer being supported by the vendor, for example Windows XP. As a provider of a multi-user integrated database, we are often asked, do we now need a standalone server to run the program? The answer is no. For example, a great percentage of small to medium-sized practices that use our software for 2 or more concurrent users will access it successfully via peer-to-peer network, as if you have a local network with one printer servicing more than one computer. It's that simple. Data transfer. Something to look for when considering switching software is the willingness of your proposed new software provider to move clients from your existing software at no charge. Again, as per my training example, some software houses consider data transfer a valid revenue stream and will charge for this service. Contracts. You might find yourself 9 months into an annual contract with your existing provider. In order to improve the functionality of your system, you wish to switch to a new software provider with as little delay as possible, but not surprisingly, you don't wish to pay for 2 concurrent licenses. Suggest to your proposed software provider that you be issued an extended initial contract. In other words, compensate for having to pay for 2 licenses initially by extending the new contract at the back end for a period equivalent to the overlap, i.e. sign a contract which initially gives you not 12 but say 15 months for the price of 12. Don't be afraid to negotiate for this, it's quite common practice. There's actually an advantage in having 2 licenses running simultaneously for a limited period, in that it provides a bridge from one solution to the other, thus allowing for training and migration of data without undue time pressure. Ensure you know your contract. Do you have to provide 90 days notice prior to your renewal anniversary date? Some of the larger corporate, less personal software providers will try to ring-fence your business by making it difficult for you to leave with clauses such as this. Know who you're moving to. Do your due diligence. Information that will be useful is at your disposal. The internet, of course, is a great tool for carrying out these inquiries. Look at the company's website. Look for reviews on the various accountants' forums. Accounting Web is a great source. Try to understand the ethos of your proposed provider. Do their apparent goals and objectives match yours? What's the feedback about the quality of their support and turnaround times? Ask to be put in touch with users who've already switched from your current provider. Ask them about their experience. The final elephant. Better the devil you know. Otherwise known as inertia. In other words, you may be tempted not to move simply because it's easier not to. Don't be the business owner that behaves in this way. Just because you're comfortable doesn't mean it's the best solution for you and can't be significantly improved, even if a bit of investment in time is required. There's an analogy with mobile phones here. The first time I purchased a smartphone, for the first month of our ownership, I used it just for phone calls. It was only later that I actually discovered how much more that could be done with it. If you don't investigate by spending a little extra time and effort, you run the risk of forever being in the dark. We operate in a competitive world, and if you are not putting the effort in, your competitors certainly will be. I've spoken so far about why switching need not be scary or break the bank. Now it's time to look at how to increase efficiency in your business by introducing a good practice management solution. So here are my thoughts about what to look out for to ensure you get the right solution. I'll give you a brief overview of the various features of a typical practice management system and the functionality you should be looking for. As well as describing the features, I'll aim to point out their associated benefits. I believe that the key is a centrally integrated database, and ideally this database should afford you two views, distinguishing between individuals and organizations as clients, but with a link between the two. For example, if a particular individual is a director of a particular client company. Important standing data is held for each client. Much too numerous to mention all of them now, but there should be fields for obvious data such as names, important dates, telephone numbers, email addresses, as well as fiscal information such as UTRs, VAT numbers, PAYE reference numbers, accounting reference dates, and so on. This is collectively known as client data and is what I meant earlier in the context of migrating client data from your existing provider. If we view the whole integrated practice management and software as a wheel with the practice management module at its center or hub, then the events such as personal tax returns, corporation tax returns, and accounts production can be seen as spokes coming out of the central hub. Basic data required for tax returns or financial accounts, such as year-end dates, client name, client directors, are pulled in automatically. No need for duplicate keying of any data. What do I mean by events? These are tasks such as tax returns, annual accounts, VAT returns, payrolls, client meetings and appointments, and so on. Most practice management solutions will be shipped with certain system-defined events, but will give you the opportunity to define your own. How are events best managed? BTC Software's PM solution employs what we refer to as the 3R principle: reports, reminders, and recurrences. And these features are something to look out for when choosing an effective solution. This is often achieved by using a system not dissimilar to Microsoft Outlook, which means it's likely to be familiar to many of you and your staff. A particular event can be set up with a start date, a due date, and a reminder date, and, if it's a regular occasion, a recurrence interval. In this way, at the appropriate time, a reminder will pop up. A prime example could be a VAT return, which can be annoying to track on a spreadsheet database or with non-proactive data software. Using proactive software, production of a quarterly VAT return could be set up as an event, which occurs every 3 months, and which will have a start date, a due date, and a reminder date and time. Upon completion of the event for a particular quarter, the next occurrence will automatically be seeded for 1 quarter hence. The recurring event does not need to be keyed in each time. Thus, the good news is that having been proactive at the start and having set up all your clients' events, you will be able to move away from reliance on your multicolored Excel spreadsheets and manual input. On setup, each task or event is assigned to a particular employee, known as the responsible user. And it is only this employee who will receive the reminders for that task. The benefit here is that other users will not be bothered with reminders for jobs in which they have no interest, although of course a report of all pending events can be run for management purposes, but I'll talk about that more later. Try and look for a solution that enables you to define your own types of events using your own office's terminology and wording. Event status. The initial status for a new event or a previously created recurring event will always be not started, which will run through to a status of completed. However, when choosing your practice management solution, I would strongly recommend a solution that allows you to create your own intervening statuses, and thus you can define event statuses that reflect the terminology and/or workflow of your own practice. I mentioned a pending events report. A good practice management solution will be able to provide you with a holistic view of all outstanding events relating to all your clients. Of equal importance is the ability to drill down from this report and filter by selectable criteria such as client name, event type, start and due dates, and event status, as this will enable the responsible user or manager to prioritize and schedule workloads and to see what particular employees are currently working on. Another useful report is the tax return status report. You should be looking for software that provides specific reporting on the status of tax returns. A real-time individual tax return status report would clearly be an invaluable report to run in December and January when tax return production is at its peak. An activity time log summary. With the competitive nature of compliance work, many of the users that we have talked to indicate that most of their compliance assignments are priced on a fixed fee basis. However, it remains important to understand and track time spent on these clients without necessarily requiring completion and processing of timesheets by employees. A useful feature to look for would therefore be automated time capture by client event and the ability to report on this. This report can be used to confirm or otherwise, unfortunately, that the fixed price you're charging is appropriate when taking into account time spent. These may be broken down into two broad groups of letters that we might call covering letters and client letters. Covering letters. These are the letters that accompany completed work being sent to clients for review or signature, such as tax returns, annual accounts. Where you will save time and increase efficiency is via the ability to insert database tags into the templates for these letters. Once a template has been created, or it might even be a system template, be it for an individual or corporation tax return, the use of database tags will allow key data to be plucked from the tax return itself, for example the tax payable, and from the client database, client name and address, thus converting the generic template into a bespoke offering for the specific client and specific tax return. Client letters are the various standard letters often shipped with practice management software, such as engagement letters, tax questionnaires, January and July payment reminder letters. However, you should be looking for a solution that allows you to create your own client letters with a design process that will enable you to insert database tags to pick up standing information from the client database and also to personalize these letters in your own house style. Also look for software with mail merge functionality which utilizes bulk letter creation. The benefits are clear. Rather than having to store client documents and workbooks outside the database, you should choose a solution that offers a central client-focused point for storage. So there is one place to go for all client-related matters. Look for software that enables you to create documents from within the client record, for example using Microsoft Word or Excel, and which also allows you to copy in documents or even folders previously saved externally. All your documents in one place. No more searching for that elusive copy of the hire purchase agreement. On a similar theme, you should be able to find practice management software that enables you to link with your email service, and which also offers the facility to scan in documents directly to a chosen client folder. The paperless office is getting closer. I'd like to leave you with a couple of questions. Is your current software aiding efficiency in your practice? Are you getting the maximum return from your software? And if you answered no to questions 1 and 2, then what steps will you take to increase practice efficiency and maximize the return on the cost of your software? For anyone thinking about an answer to question 3, why not see for yourself how BTC software solutions can work for you? We'd be delighted for you to trial our software free of charge, attend one of our product webinars, or speak to a member of our team. We're also going to be exhibiting at Accountex in May, so we'd be delighted to see you at our stand. Finally, thank you all for your attendance, and for those of you still awake, there will now be a questions and answer session.
Hi Ian, thank you, that was very good. Okay, I'll just take back the control here.
Thank you.
Okay, we have a good few questions coming through here for you. First of all, how much does the software cost?
I'm going to hand you over to my colleague Tim, who's going to answer that. Tim?
Hello everybody. So we have obviously different pricing, but we offer something which will probably be applicable for the majority of interested parties, which is an unrestricted bundle, what we call the solution bundle, which includes practice management software, unrestricted tax software within practice management, and year-end accounts production. And for an unrestricted version of this software, in terms of user numbers and clients, to make unrestricted number of returns, the price is £995 per annum, and there is also a monthly option available.
Thanks, Tim.
Okay, there's another question in here. Sorry, does BTC software work for a sole trader?
Yes, indeed it does.
Okay. Another one here. How easy is it to transfer from other software packages?
We make the whole process very easy for you. We can transfer everything that I referred to as client pretty easily. We can coach you how to do it yourself, or typically someone from our support team will help you in this process.
Okay. One more question here that's kind of linked to what you said there. What support does BTC software offer?
We offer full support at no extra charge. We have a 3-hour turnaround for support, and
Maybe I can just expand on that slightly. So we offer full support with the product. We don't sell the product in isolation. We offer pre-sale support in terms of bringing over the data free of charge. There's no additional fee for that. Likewise, training. And we do run a series of webinars, but we can offer individual training, remote training, group training sessions, if applicable. So just wanted to add that. And in terms of support, the way our support works is if you have a question, it's telephone support and email support. Majority of people tend to use the telephone to call up. If a member of the team is available, then you'll be put through straight away. If not, we raise what's known as a case, and rather than keeping you on the line, we reply and respond to your question within a maximum of 3 hours, the average being a lot less than that, but within a maximum of absolutely 3 hours.
Okay, brilliant. So that's all the questions that we have through today. I'd like to thank Ian for his part of today's presentation, and I'd like to thank all our attendees for joining us today. So thanks everyone, and we'll send you the recording and the presentation slides afterwards. Thank you everyone.
thank you.